Bitcoin has been performing amazingly lately. It's been the best performing asset, large cap asset globally. But most of you guys in the past quarter have created zero portfolio growth for yourselves. And you know that. Zero portfolio growth. And that's simply because you don't know what you're doing. And that's fine, but that needs to change. There is not enough time left in this life for us to grow our wealth because we are battling inflation. We're battling hyperinflation. We're battling currency wars. I'm going to show you guys something that probably 99% of the world doesn't even understand right now, which is the fact that the US dollar is slowly falling apart. And that has big ramifications for how asset markets move throughout the rest of the world. Okay. So by 2030, you need to be in a good position to set yourself up to really be okay financially. Okay. The world is going to change in a big way over the next 5 years, especially because of AI, but especially because our governments have control over our currencies and they keep printing our purchasing power away. In today's agenda, what I'm going to cover is why markets pumped so hard in Q2. I'm going to talk about how Trump and the Treasury Department in the US got together and essentially broke the market, broke the bond market, only to allow the US dollar to fall apart as a result of this. I'm going to teach you that everything you've ever been told about crypto is practically a lie. Okay. And this current cycle that we're in is nothing like the previous ones for a very specific few reasons that I'm going to show you. I'm going to give you the new rules because we're playing in a new game. We're playing in a new game of crypto right now that nobody really understands how to play in. It's not that simple. It's also not that difficult if you know what you're looking for. I'm going to show you my idea for the ultimate setup going into the summer, which I'm calling the summer heat wave. We can see there's a bunch of liquidity that's hiding in plain sight. There's also massive regulatory floodgates that are opening in the US right now. And I'm going to show you exactly what my strategy is for Q3 going into Q4, because ultimately, when there's opportunity in the market, you want to be able to take advantage of it because there's not very many periods of the year where you have hyper amounts of opportunity. And if you don't take advantage of them, you miss out on the maximum amount of upside that you can capture in a tough market. Let's be honest, guys, this has been a tough bull market for most people to actually grow their portfolios in. And I'm going to show you why and how you can change that after today's call. Let's talk about the pump of Q2 and why macro is absolutely everything in these markets. First of all, I want to teach you guys the mechanics of how treasury bonds work. This gives you a bit of context for the first lesson that I'm going to go through. So when you're looking at a bond, there's a price of a bond and there's a yield on that bond. Okay, when there's demand surging into the bond market, when people want to buy US government bonds, the prices of those bonds go up and the yields go down, right? So the first lever that you can see on the left-hand side of the screen describes that relationship perfectly. Bond prices go up, bond yields come down. But when bond prices go down, meaning investors are selling massive amounts of bonds, right? The demand is weakening for the bonds, the yields go up. Okay, the bond yields end up going to the upside when the prices on the bonds are going down. This is a very, very key piece of context for what I'm going to explain first, which happened in Q2. Okay, so let's talk about the aftermath of Liberation Day. On April 2nd, the Trump administration announced massive degrees of tariffs worldwide, right? This created a huge amount of volatility in the stock market and in the bond market specifically, because investors were going, oh my gosh, there's going to be a ton of inflation now, ton of economic risk. This thing's going to reshape the way the world's economy works for the next 5, 10, 20 years. Everyone was panicked. The markets had already probably sold off about 15 or 20% by this time, the stock market specifically, and people were freaking out. And what happened is treasury yields jumped like crazy and bond prices dropped, which doesn't really make sense for most of history. When you have these economic crises, when people are not sure what to do, they usually move into cash. They usually move into bonds. In this case, the bond market was slowly breaking. Yields were going up, bond prices were going down. When yields go up, US government debt gets more expensive for the government to pay out on, right? This was not the goal of the government. In this case, they were trying to get yields down. Right? They were trying to crash the markets and move people's money into bonds. And what happened here is people decided, mainly the other big nation states of the world, the Japans, the Chinas, the European countries of the world decided, fuck you to the US. You guys want to tariff us? We're going to get out of your bonds. We'll cause a currency crisis for you. And that's exactly what started in early April here, is bond yields went up and bond prices went down. And what happened as a result of this is that the US financial system started to become under a lot of pressure. And the Treasury Department, under the direction of Scott Bessent, who's the Treasury Secretary in the US, who's essentially Trump's right-hand man in running the economy, went to Trump and said, we've got a problem on our hands. We're breaking the bond market with these tariffs, and we need to give the market something so that people stop freaking out and the bond market doesn't break. Right, that's exactly what we saw. So on April 9th, a week later, there was 1 week of pressure and massive market swings. The Trump administration came out and said the markets are unstable, the bond market at least. In that clip of Trump, he was saying, I could see the bonds getting a little bit yippy. And they came out and they said, okay, we're going to pause the tariffs for 90 days. And the market started to rebound, right? Pressure was eased off of the bond market. Stocks were able to bottom and start to rally from that point forward. But what we witnessed on April 9th was the breakdown of the bond market for the first time in a long time in a very, very, very significant way that is basically having a massive ripple effect through markets right now. Okay. We call this concept the Trump put, right? You may have heard people on Twitter at the time talking about the Trump put, the Fed put, a level to which prices get down to where somebody decides, hey, we got to step in and do something about it, right? The Fed has their level for that. In this case, the Treasury went up to Trump and said, we're going to break the bond market if we don't do something about these tariffs and create some demand for our own government debt. And on that day specifically, the Trump put was enacted. But why? Okay. Why did this create such a massive rebound in markets after this point? Why did it kill the dollar? And most importantly, how did this whole process happen? Okay. Well, I'm going to explain to you the perfect storm for a melt up, which is what we experienced in Q2 in this market. We had a massive melt up where people weren't expecting the markets to go up. Maximum pain was for the markets to shoot up because people were slowly de-risking. They were selling their stocks. They were freaking out. They were panicking. They were selling their Bitcoin, for example. They didn't know what to do. It created this perfect storm for a melt up. Now, let me explain this concept to you guys first of all. When Trump came into office, he set up this thing called Doge, the Department of Government Efficiency with Elon Musk. And Elon came out and he touted the fact that we're going to be able to, really reduce the amount of government spending that's happening. We'll be able to bring it down by about $2 trillion. Okay. Trump got in, right? Elon Musk follows him into office, starts going through things with Doge, gets into the books of the Treasury Department, realizes after a while that there's pretty much nothing they can do to slow down government spending. It's way too big of a problem for them to fix. Okay, so they were only able to cut down about $160 billion worth of savings, way, way, way below their goal. So this was the first sort of heads up as to say, hey, this whole government spending thing, it's going to continue. We call this concept fiscal dominance. Okay. And during the same period of time, government spending actually increased massively. Okay, so we saw Scott Bessent, we saw Trump throughout the campaign. We saw them once they got into office saying, we are looking to bring down the amount of expenditure of this government. What they were telling us was one thing. What was happening in reality is that government spending was increasing by about 6.5% versus the same period from last year, right? Even if you adjust it for inflation, there's an $81 billion increase, guys. This is absolutely crazy in terms of government spending. So they were telling us spending is going down when another thing's happening, right? That fiscal largesse that people have been talking about has been continuing. Then what we saw is markets see the big, beautiful bill. Okay, this was Trump's big bill that he's been passing, right? It's almost fast. They want to pass it by July 4th right now. And when investors started to realize that, hold on a second, they don't want to cut spending. They want to spend way more money. This started to reinsure investors that could read this kind of information in the market, the Treasury information, and realize that fiscal stimulus in this case would persist, right? And just so anyone who doesn't know what fiscal stimulus is, it's when a government increases their spending. Okay, they increase their spending, they often lower their taxes at the exact same time in effort to boost economic activity. We know Trump's a business guy. We know he's a markets guy. We know he wants to boost the economy and boost the markets. But in the first quarter of the year, this wasn't very evident, right? Because he was crashing the markets, he was implementing tariffs up until Q2. The big, beautiful bill comes. Now, the main stimulative components, the things that actually make markets go up, the thing that makes the economy grow, were the tax cuts and the increases in spending. This big package is a massive, massive bill of spending for the government. In fact, they've never spent more money, right? They've never wanted to raise the debt ceiling to higher levels. And all of these things together, when you realize, is actually very good for risk assets. Okay. So despite everything that we saw with Doge, despite everything they told us about government spending, right? We realize in this time period that government spending is unstoppable in the US. Okay. And what this means is that global liquidity, when you have massive increase in government spending, you have a decrease in the demand for US government debt. It starts to kill the US dollar. Okay. Global liquidity started to shoot back up, right? Global liquidity was not positive at the beginning of the year at all. Once these things started to happen, US dollar goes down in value, global liquidity starts to surge. Okay. And combined, all of these factors supported this massive decline in strength in the US dollar. And there was one point that I just missed by accident. I want to show you guys this specifically. Remember the day that I talked to you guys about, April 9th, right? April 9th was the day that the bond market started to fall apart, essentially, because of why? They decided to roll back the tariffs with a 90-day pause. If you look at this chart on TradingView and we go to the 9th of April here, okay? The dollar was already down at 102. The next day, the US dollar goes down by 2%. Massive decline. The largest decline that we've seen out of the US dollar in a very long time in a single day. And from that point forward, right, from the point that Trump basically threw in the towel on tariffs for now and called the 90-day pause, the US dollar lost 5.5% of its value. The world's reserve currency lost 5%. This is not what you want to see when you're saving your money in US dollars, that it's losing 5% of its purchasing power, right? After already losing a 5% amount from when the time he got in office, because many global capital allocators realized that Trump's going to probably push the dollar down. Okay, it's what he did in the last presidency. So what you may have not realized, and this is what I alluded to at the very beginning of the presentation, is the fact that the US dollar has gone down by 10% just in this year. 10%, the world's reserve currency has gone down. This is pretty scary, right? If you're holding the majority of your money in US dollars and treasury bonds and US dollar denominated assets, you're losing money, right? So all of these factors together supported this massive decline in the US dollar. And that's a big problem, right? And what this created was the room for the markets to grow, because this right here boosted global liquidity. And I'm going to show you how that works in a second. So let's visualize how these policy shifts work. First of all, looking at that US dollar index, we could see since the beginning of the year, it's been in a massive decline, right? What you'll also notice at the bottom of this chart is global liquidity that's been surging since the beginning of this year. They have an inverse correlation, right? An inverse relationship. When the dollar is surging, global liquidity is declining. When the dollar is declining, global liquidity is surging. Well, this massive move lower out of the dollar, and guys, this is not like a small move lower out of the dollar. This is a massive historical move lower out of the US dollar, created a huge surge in global liquidity that is now having knock-on effects on the market. Okay, it's what's been driving the markets up, because markets move on liquidity. When global liquidity is rising like it was throughout, basically the time the dollar started to fall apart, February, March, April, May, after some time, it's about a 100-day lag, okay, 3-month lag. This translates into growth in the market. So if you see from the time that the dollar basically topped and started to go down and pushed liquidity higher, we're looking at this part of the chart right here where this green arrow is pointing. This is global liquidity going up. It took 100 days for that global liquidity to start to seep its way into the markets in mid-April. And from April forward, the markets to rebound like crazy to new all-time highs where they sit today, right? Is this making sense with everybody? Do you guys understand the relationship between the dollar, right? Between the reduced demand for bonds, crushing the dollar, increasing global liquidity? Does this all make sense to you guys? Do you understand how there's a lagging effect here where liquidity goes up, right? This liquidity going up last summer into September. 100 days after that, we see a massive period of market growth, Q4 of last year, right? And then we have this big decline in liquidity, right? Which happened during Q4 that pushed the markets down in Q1, right? You see how this lagging effect is very, very prominent in the markets. This is what is very important for you guys to understand, is this relationship between the dollar, liquidity, and risk assets, okay? And when the dollar is doing well, risk assets are not doing well. But when the dollar is doing very poorly like it is right now, it makes no sense other than for risk markets to continue higher. Because what are they doing? They're repricing to the fact that the US dollar is losing purchasing power, right? So this gave Bitcoin this massive, massive push to all-time highs. If you zoom in on it, here's global liquidity going up since the beginning of the year. And then in April, it started to kick into the market with Bitcoin, right? You could see we bottomed here after the bond market essentially broke and Trump said we're going to have this 90-day pause. The demand for US dollars fell off a cliff. And this was the sort of final signal the markets needed to send Bitcoin back higher to new all-time highs. Really, about 6 weeks later, 5 or 6 weeks later, we're back at all-time highs, printing new all-time highs in Bitcoin's price. And now we have the NASDAQ, we have the S&P 500 doing the same thing. So it's very important that you note down that the DXY, which is a dollar index, and global liquidity have a completely inverse relationship, okay? And what this meant is that Bitcoin overall has been bringing home the bacon for investors. Big league investors looked at what happened with Bitcoin, its resilience over the past couple of months, and went, we don't own enough of this. Okay. And that's why the demand for Bitcoin has been so crazy recently, and prices have just been staying at 100K, right? We've been thinking, okay, well, market's going to go up and it's going to have a dip, right? We've had no dips, very, very shallow dips. That's because Bitcoin has been, quote unquote, bringing home the bacon. And there's a few key reasons why this has been the case. First of all, in 2024, we saw the introduction and massively rapid growth of the Bitcoin spot ETFs. And what this did is it opened the door for a huge amount of institutional capital to flow into the asset. This legitimized Bitcoin and made Bitcoin a real thing, right? A real investment for the world to buy. Throughout 2023, 2024, and 2025, all of the world's major financial institutions started to integrate Bitcoin into their portfolios. They started to consider it a more core asset, and they moved beyond their smaller pilot programs. Yes, banks like JP Morgan were buying Bitcoin in 2017, and they were experimenting with crypto and ICOs. Nothing like what they're doing today, and nothing like what the scale of BlackRock is doing right now with their Bitcoin ETF. And then in Q2, which we just went through, we're at the final 2 days of Q2 right now, Bitcoin benefited from this massive reallocation away from traditional US assets, right? Bond prices are in the toilet. Investors are getting out of bonds. Investors decided to get out of a lot of US assets, right? We saw the US stock market plummet, right? A massive, massive stock decline. People started to reallocate their capital, right? People in Europe, people in Asia, people in the Middle East decided, well, maybe the US isn't the place to invest right now with all this uncertainty. What other options do we have? One of those options has Bitcoin, and it was actually the best performing option throughout the entire quarter, right? And the final cherry on top for this particular pump, and what allowed Bitcoin to, quote unquote, bring home the bacon, is the fact that we had this release of pent up liquidity start in April. Okay. We had all this liquidity start to flow into the markets from that lagging effect. We had a massive open interest surge. A lot of new buyers wanted to come into the market and essentially long Bitcoin. And it showed a lot of investor confidence in Bitcoin, right? It completely outpaced all the other assets to new all-time highs. And what it showed us, what it showed the rest of the world, what it showed me, what it showed you, hopefully it showed you this, is that Bitcoin proved to be the clear winner for global capital allocators. It caught the most amount of new inflows. It caught the most amount of demand. It caught the most degree of price increase. But what about the altcoins, right? Why didn't the altcoins pump as much as Bitcoin? Why didn't they even recover back to all-time highs? Bitcoin's at, it's not at new all-time highs, but it's essentially at all-time highs right now. Why are the rest of the altcoins not doing that? Why is ETH not up there? Okay. I'm going to explain to you why this is the case in a few minutes. But first of all, I want to visualize this with you guys, because many of you don't understand how poorly the altcoin market has performed this cycle. You don't even realize it until you look at this chart. Okay. In orange is the price of Bitcoin. It's been going up and to the right since the very bottom of the market cycle in November of 2022. On the candlestick pattern that you can see in red and green, this is the price of the altcoin market. So Ethereum plus all the major altcoins. I think it goes up to the top 100 altcoins essentially in this chart, priced in Bitcoin. And what you can see is they've been continually declining, right? So the altcoin market collectively has been unable to outpace Bitcoin, right? Zero benefit to holding altcoins from the bottom of the market cycle to now. So some of you guys have been holding coins that you had in the last cycle thinking they were going to come back this cycle, and you would have been better off just converting your coins to Bitcoin at some point along this chart, because all you've done this whole time has been losing value in relation to Bitcoin. Bitcoin's at all-time highs. Altcoins compared to Bitcoin are at all-time lows, essentially cycle lows, right? This is terrible. You don't want to be a massive altcoin holder right now. Maybe you want to be in a few weeks or a few months, but as of right now, this chart is not telling you that you should be an altcoin holder, right? Big problem. So everything that you've been told about crypto is essentially a lie. You should hold altcoins. You should have this super diversified portfolio. You should buy the dip on altcoins and you should just wait for altcoin season. All of this is a lie because this chart tells you that, right? What you should have been told the whole time is you should be stacking Bitcoin and looking for outperformance opportunities in the altcoin market when it's outpacing Bitcoin. But for right now, the general market has not been outpacing Bitcoin. So why have you been focused on altcoins? Why have you been focused on meme coins, right? You've been taking on too much risk. Everything you've been told about crypto is a lie. And it's the fault of the crypto industry, right? It's the problem that I've set out to solve for so many of us in this world right now is the fact that you can't get good information about crypto. You go on YouTube and you find these shitty videos of people telling you that you should buy this altcoin and buy that altcoin, and you don't even realize they're being paid to promote all these things, right? It's not in your best interest to get all this free information off the internet and think, oh, I just found the next coin. Right? All this information is garbage. That's why I put these classes together, is to educate you guys the fact that there's real information. There's a real way to look at this market, but it's not the way that people are looking at it on YouTube. Okay. Before we get into the next part of the presentation, I want to give you a bit of context about this current cycle because the game has changed. I told you that at the beginning of the call. I want to explain why the game has changed. Okay. In this current market cycle, all of the demand in the early stages of the cycle, the first, let's say 65-70% of the cycle, was driven by institutional adoption and investment in the Bitcoin ETFs. You can see here, global liquidity, which is on the bottom of this chart, is trending sideways, while Bitcoin is trending higher. We don't see this relationship before this cycle, okay? If Bitcoin is going up, global liquidity is going up. If Bitcoin's going down, global liquidity is going down. In this case, global liquidity is going sideways. Why is Bitcoin going up? Well, what happened during this period of time? BlackRock, all the big institutions, they were accumulating Bitcoin. They were filling their ETFs up to launch them here. Okay. The real demand in terms of liquidity didn't even start until Q4 of last year. That's when we saw liquidity start to bump up in the markets and actually translate to price growth. That's why this pump was so aggressive compared to this slow and steady wind up in the markets. This was institutional demand. Okay. So in terms of the game changing, the fact is that this cycle has been an institutional cycle. It's been driven by institutional flows. It's not been the halving. It's not been global liquidity. It's been institutions. Institutions have been the thing that's been driving Bitcoin's price up. But over the long term of history, and if you zoom out and you look at, okay, what's the most accurate indicator to look at that's going to tell me where the price of Bitcoin is going? It's still liquidity, right? Global liquidity. The problem is for the altcoins is there's been no abundance of sustained global liquidity in this market cycle. There's been no loose monetary policy. Interest rates have been high. There's been quantitative tightening going on. There's been no stimulus like what we saw in COVID. That whole market cycle that we went through in 2020 and 2021, that wasn't real. That was a system propped up on fake stimulus money that pumped through the markets, right? Everybody was home. They were bored. They had money from the government. Interest rates were low. Everyone was getting business loans. People felt rich. They decided to invest a lot of money. That's when super speculative assets like altcoins do numbers, right? The only reason Bitcoin has been doing numbers is because the institutions have been buying it and the smart investors, the smart capital allocators of the world have been buying Bitcoin. They have not been touching the altcoins, okay? So if you didn't understand this over the past year, you've been getting wrecked because you haven't been realizing that this current cycle has a completely new set of rules because it's being dominated by the institutions. Now, are the rules going to change? Of course, the rules change every 3 months, every 6 months. We start to transition to new phases of the market cycle where new things matter more than they did previously. Okay, but for right now, what we're seeing is a massive degree of institutional control in this market. Okay, and as a result, you've been told all these lies by people on the internet about crypto, and it hasn't helped your portfolio grow. Okay, so I want to debunk a couple of these myths for you guys because they're very, very important for you to not, sort of have as your guiding North Star for how you approach this market cycle. You need to erase these things from your memory completely if you want to be a successful investor. The first big misconception that people will just throw at you on the internet is the fact that altcoin season is coming. So you better just keep stacking altcoins if you want to get rich. And this idea that everything is going to pump is really rooted in previous cycles where crypto was not being dominated by institutional capital and the overall market cap of crypto was a lot smaller. Okay. There wasn't as many people trying to extract the maximum amount of capital from this market. There's people fooling around and pumping coins. There was no like real business models built around stealing retail investors' money like there was in this current cycle that we're in. Okay, so 2017, 2021 were completely different, right? We had different degrees of global liquidity. We had looser monetary conditions, all those sorts of things. But now, when you look at the broader altcoin market, I showed you that chart, nothing's pumping against Bitcoin. And we do see pumps, they immediately sell off, right? We saw this rebound in markets out of Bitcoin recently. Bitcoin's been going up. Altcoins hit a little plateau around mid-May, and they've sort of been dwindling off ever since, right? That's because as liquidity comes into the market, people start to buy, people take profits, right? People who are holding these big positions are taking profits because they realize there's no abundance of liquidity to support this. People are on Twitter looking at these charts going, well, all the data lines up. We're going to have altcoin season again, right? What the fuck does OX Nobler know about crypto? Clearly nothing here, right? Fooling their audience. Same thing here. Alt season 3.0 is coming. We will all get rich. Are you ready? Looking at this chart, right? Altcoins market cap. What this is telling you is that the altcoins market cap is in the gutter. What nobody is looking at is the fact that interest rates were way lower during the last two altcoin seasons than they are right now. We have interest rates at incredibly high levels for modern history right now. Somehow the United States economy is still on fire as a result of that. That in itself is a pretty amazing feat, in my opinion. But if you look back, the last times that the altcoin market, which is total 2 divided by Bitcoin, so priced in Bitcoin, was actually outperforming Bitcoin, where it actually made sense to buy altcoins versus Bitcoin, where you would make more money as an altcoin investor versus a Bitcoin investor, happened in these 2 previous periods, right? Where interest rates were low. Interest rates were pretty much zero here, and they're about 1.5%, working their way up towards about 2% back in 2017 into 2018. Okay, interest rates were really low. For this whole cycle, interest rates have been at 5% or they've been at 4.5%, now 4.25%, right? Really, really high, more than double as high as they were in 2017. And people have gotten smarter. They've realized you can extract capital from retail investors by selling them narratives, extracting the money from the market, and going and buying more Bitcoin with it. Altcoin seasons thrive in liquidity-rich environments, okay? There was easy money flowing around the world in 2017 and 2021. Low rates. There was QE in 2021. The markets were flooded with capital. In this case, that's not what we're experiencing right now, and that's why your altcoin bags are not pumping, okay? Altcoins, you got to understand this concept of the risk curve. They're the furthest out on the risk curve. So if you look at all the assets in the world that you can buy, the safety plays over here are like your bonds, okay? Currencies, Swiss francs, et cetera, euros, all that sort of stuff. Then you move over towards real estate. Then you move over towards business investing. Then you move over towards private equity and VC. And then you get towards crypto, which is on the very farthest end of the risk spectrum over here, right? Altcoins are all the way in. They're off the map, okay? They're all the way over the edge on this side. They are the first thing to pump in really abundant environments of liquidity, right? When there's lots of risk taking, they do well. When there's conservatism in markets, when there's not a lot of risk taking, when there's high interest rates, when there's restrictive monetary policy, they don't pump, right? Now, Bitcoin used to be on this side of the risk curve over here, but during this cycle, all this institutional demand has started to shift it farther over here. Right. So now it's sitting over here with real estate. Maybe it's not sitting with bonds. It's not as safe as bonds. But if you look at bonds, they're losing their value. What's Bitcoin doing? It's appreciating. So as more investors realize this, as more Bitcoin is bought, less of it is sold, it starts to move farther over to this side of the risk curve, while the altcoins stay over here. Now, historically, everyone said, well, the altcoins follow Bitcoin, right? So if Bitcoin's moving along the risk curve, altcoins should too. That's not what we're seeing in the charts, right? Show me the data. Show me the charts that say that that's true. There just isn't any evidence of that, right? Then we had pump fun. I talked about these extraction events. All of these extraction tools allowed insiders, allowed whales in this market to just destroy retail interest. So yes, there was a time in this market over the past couple of years where retail investors wanted to go and risk a lot of money in this market. They wanted to bring in money. They wanted to buy altcoins. The altcoin market did well for short periods of time. And what happened is these really smart whales, these really smart AI bots, they came in and they extracted all this capital from the markets, right? You saw Solana blow up over the past couple of months. You saw Pump Fund essentially, every token on Pump Fund has died. You saw the entire Solana meme coin market die. Everything related to super high risk activities in crypto has died because it turned into capital extraction. And when people lose their money in the market, they don't feel like taking another shot, right? If they're swinging, right, and they never hit the home run, they go. They're moving on to the next thing with their money. And that's what's been happening in this market is it's been killing retail investors like many of you guys on this call and making you go, you know what? I'm just about ready to throw in the towel on crypto because this thing never makes me any money and it just causes me a headache. Okay. Most importantly, institutional investors do not care about altcoins right now. They care about some altcoins, okay, but not the broader altcoin market. And they're not actively allocating towards the broader altcoin market. So that's why you see this disconnect with Bitcoin performing amazingly well and altcoins not doing any numbers. Okay, second myth to bust. Altcoins will make me more money than Bitcoin, right? If I just hold my altcoins, they will double faster than Bitcoin will, right? It only makes sense. They're smaller in market cap. Quick poll. I just want to see this in the chat. Who wishes they had put every dollar of their crypto portfolio this cycle into Bitcoin instead of anything else? Who wishes? Who's going, fuck, I never bought enough Bitcoin. Bitcoin did well the whole time, but I was holding Sol. I was holding Doge. I was holding this, right? Even me. I'm going, why? I thought 50, 60, 70% of Bitcoin in my portfolio was a lot of money. No. Should have been more the whole time, right? Should have been more. Rotate Bitcoin away for periods of outperformance, right? When you see a coin outperforming Bitcoin, there you go. You can get more Bitcoin. But for the broader altcoin market, it's just not there, okay? So while altcoins can temporarily 10x, right? Some altcoins, I mean, in the last cycle, we saw every altcoin 10x. 10x was nothing. If you didn't 10x, you didn't even, what was that, right? 95% of the altcoin market, I mean, at this point, it's probably more, 99%, retrace 80 to, basically to nothing, 80% to nothing, and never recover. Okay. But Bitcoin doesn't have this problem, right? It consistently leads the pack in what we call risk adjusted returns. You're taking on risk and it's rewarding you for taking on that risk because it's being resilient across market cycles. Other coins are not doing this. If you've been holding Ethereum since the last cycle and you bought it at 3,000, congratulations, you're still underwater, right? Like that doesn't really make sense in your mind. You would have thought, well, okay, I remember when I bought ETH in the last cycle, it did way better after Bitcoin. That's why I bought it. Then the market cycle ended, but now we've got a new market cycle. So let me just hold my ETH because it's going to 10K. Eventually, ETH might go to 10K. Okay, I'm not bearish on altcoins because altcoins can make you a lot of money and altcoins have made me a lot of money. Okay, I'll be the first one to say that. But the truth is they're not worth bag holding for years upon years or months over months when they're underperforming Bitcoin. There's very, very few altcoins that outperform Bitcoin, okay? They outperform for a small period of time, and they're the exception. They're not the rule, right? Everyone on YouTube, everyone on Twitter is going, altcoins are going to outperform Bitcoin. Forget Bitcoin. Bitcoin's too expensive. You can't even buy a full coin. It's not worth it, right? Even if you only have 20K in the market, altcoins, don't buy Bitcoin. Bro, I could have bought a quarter of a Bitcoin a couple of weeks ago with 20K, right? You put your money in altcoins, you probably lost 20, 30% in the past couple of weeks, even just on that war dip that we saw, right? This is not the rule, right? The most important thing with altcoins is timing, because the timing is what's nearly impossible for most people. I was buying Solana down here, okay? And then Solana outperformed Bitcoin for the better part of a year and a half. Right. And then I sold out of Solana when it started underperforming Bitcoin. This is how you buy altcoins and make money, because you're actually acquiring more Bitcoin as a result of holding the altcoin. But if you've just been holding Solana essentially since the beginning of the cycle until now, you've underperformed Bitcoin. Right. If you've been holding it since the all-time highs of the last cycle, you've been underperforming Bitcoin. Instead of just converting your position to Bitcoin. Nobody looks at the charts like this. Look at the altcoin priced in Bitcoin and you will see its true performance, right? It's like a benchmark. You know how people say, well, if it doesn't beat the S&P 500, I'm not going to invest in it, right? Well, if it doesn't beat Bitcoin in crypto, it's not worth your money, okay? So altcoins rarely outperform. Now, Bitcoin is becoming this mainstream institutional macro asset, okay? All of these things are providing growth towards Bitcoin. ETF flows, you have sovereign interest from, basically the other governments of the world, let's say. And you have all this long-term conviction, but altcoins are just short-term capital rotators. Fast in, fast out. They're narrative driven. They're very fragile. Okay. So here's Bitcoin going up. Here's the altcoin market suffering, right? Solana had periods of outperformance against Bitcoin. Most of the time, it's trading down or sideways against Bitcoin. So it's not worth holding all the time, is what I'm trying to get across to you guys. Now, the smartest investors in crypto are using their altcoin plays to take profits back into Bitcoin. They're not just going to stay all in hoping for 100x. They're not going to leave a moon bag in. They're not going to just buy one coin and sleep on it for the next 5 years and they're going to magically be wealthy. XRP. Had to say it, but you guys have been underperforming Bitcoin. Look at the chart. They treat Bitcoin as a reserve asset, the smartest investors, and it holds the value of their portfolio through cycles, right? If I just dumped my entire portfolio into altcoins at the beginning of this market cycle and not even cared about buying Bitcoin, I would not be in the position that I am today with this market, because Bitcoin has delivered an insane amount of growth to a relatively large amount of capital in my portfolio, because it's been outperforming. The altcoins have just not been doing that. Okay. So here's the historical reality that all of you guys need to understand. Bitcoin has made way more millionaires through consistency of outperformance than altcoins have through people just throwing money in and winning a lottery ticket. Okay. If you put every dollar that you ever invested into crypto into Bitcoin, like we just all figured out, you probably would have been better off today than holding anything else. Okay. But there's a few exceptions, right? When you have outperformance, you can find it with the right strategy. I'm going to give you an example of something that we just bought in BNB recently that did numbers for us while Bitcoin was trading sideways. This is hyperliquid. Okay. This is hyperliquid price in Bitcoin. This is hyperliquid price in USDT. We got into this because I noticed that it was outperforming Bitcoin right around here. And I decided, hey guys, this looks like a great project for us to capture some short-term upside against Bitcoin while the market is slow. Okay, the market is in this rebuilding phase right now, where if it really wants to take off from here, it can. Liquidity conditions are supportive of a rally for the rest of the year, and altcoins can do well, right? But only if they're outperforming Bitcoin are they worth your time. So in this case, I saw this chart was outperforming Bitcoin, right? It doesn't look like that other chart I showed you with all the altcoins going to zero. So I said, let's get into this project. Let's capture it for some outperformance. We sized up in our portfolios. We bought some hype. We wrote it for 63%, right? Bitcoin went up about 5% in the same time period, 5 or 7%, and we banked 63%. This is a textbook example of outperformance actually benefiting your portfolio versus holding an altcoin and hurting it. This position was 28 days. This was a 1-month hold in the portfolio. We're not holding it for the rest of our lives. We're not holding it for the rest of the cycle. In fact, it's trading lower than where we sold it today. So it was a good sell, right? It was an excellent sell. And people in the group made a lot of money off this. This guy, Lassay, made almost 30 grand in profit just from holding this coin, outperforming Bitcoin during this 28-day period. Okay. So this is what I want you guys to focus on, is go out there and look for outperformance in the charts and position yourself with a strategy that actually gets you in and out with outperformance, not holding it and waiting for it to work out, or, Alex Becker told me to buy this, so it'll work. No, like have an actual specific strategy that identifies altcoin outperformance against Bitcoin and then positions you to actually make returns on it so that you can accumulate, guess what? More Bitcoin. Next misconception, which is a huge lie in crypto: Ethereum is the safest altcoin. Okay, well, the chart is telling you that that's not the truth. Okay, in every macro risk off environment, meaning whenever the markets go to shit and everyone freaks out, ETH bleeds way harder than Bitcoin. So it's not safer to hold than Bitcoin. And even during bullish periods, right, the market has been in a bull market, right? Ethereum BTC has been in a multi-year downtrend this entire time. So if you've been holding if you've been holding Ethereum since the freaking bottom in 2022, guys, right here, right around this period of time here, you've been losing so much of your portfolio to its underperformance against Bitcoin, right? You've been losing money in crypto for no reason because you decided to hold Ethereum because it's the safest altcoin, it's the largest cap altcoin, versus just holding Bitcoin. It doesn't have that same degree of absorption of institutional capital, okay? If you look at Sol versus Ethereum, Sol outperformed ETH the whole market cycle. In fact, it still relatively is outperforming ETH when you look at the higher time frame chart. People who said Sol had a huge drawdown in the last cycle. I don't really want to buy it anymore. I don't know if it's going to come back to life. FTX was all over it. I don't trust Sam Bankman-Fried, whatever. Guess what? Solana outperformed. If you looked at one thing, which was Sol against BTC and Sol against ETH and ETH against BTC here, you would have realized, there's 3 charts that tell me the confluence of this decision is to buy Solana because it's outperforming. In this case, if you were holding Ethereum, you've just been losing money all cycle. And a lot of you guys, have like a big position in Ethereum, or you only hold Ethereum, and you've been losing money, right? It's frustrating, but you're not looking at the right stuff. So hopefully this is an eye opener for some of you guys to fix this. Next one, this coin has strong tech, therefore it will moon. Now, this is a big no-no in crypto because history shows us that coins with objectively better tech, like better actual projects with smarter people who run these things, often underperform those with stronger marketing and viral narratives, right? The market doesn't reward what's best. It rewards what the market wants. Right? It's most importantly what the market wants right now. Look at AVAX, right? AVAX, this whole cycle, it's great layer 1, underperforming Bitcoin, right? You lost money holding AVAX. You lost money holding Chainlink, right? Isn't everyone in love with the technology of Chainlink, right? Isn't Chainlink supposed to change the world? Nothing, right? Underperforming Bitcoin. How about Ondo, everyone's favorite RWA coin? Right? Had a brief period of outperformance against Bitcoin in December. Ever since that point, it's been going down. If you've been holding Ondo going, I know RWA is the next big narrative, you've been losing money against Bitcoin. I'm not against these coins, guys. I'm not a bear when it comes to altcoins. I'm telling you that you're losing money if you're not looking at charts like this because the altcoins are underperforming Bitcoin. When they outperform, like Hyperliquid just did, we snipe them, right? When they're underperforming, we don't hold them. Let's look at SUI. Right? SUI has just been bouncing back and forth against Bitcoin the whole cycle. For the most part, this year, it's just been underperforming. Some of you guys have been holding SUI, you've been watching all the SUI, developer conferences and like, oh my God, this tech's amazing. It's better than Sol. It's better than ETH. It's going to blow up. It's going to change the world. The chart's not telling you that, right? The demand for this versus Bitcoin is just not there. So why would you be holding it? Hedera Hashgraph, HBAR, right? Isn't this built by some of the smartest people in the world? Ex-Google, ex-Microsoft people? Underperforming Bitcoin, right? Then you have hype, okay? Something that people want right now. Trading perps and some smart people behind this project that went, you know what, let's create a token buyback so that the price of this thing goes up. People talk about hype, they trade on our exchange, we make more trading fees, blah, 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 blah. One day, hype's probably going to blow up and look exactly like all these other charts. But for right now, it's outperforming, and that's where there was opportunity in this, right? That's as simple as it is, right? So the strongest tech doesn't mean just hold it forever. Just because you got sold on the narrative, just because you got sold on the tech or the founder or whatever, doesn't mean that it's going to do better for you, okay? Finally, the only way to lose is to sell, which is total, utter bullshit. This isn't just wrong. It's how people end up holding worthless positions into nothing, okay? When you're not selling, it means you're staying illiquid in a dead meta. Now, if you're holding something that's performing fantastic, this isn't the case. But for most of you guys, this isn't what you're doing, right? You're holding something like AVAX and it's going down. You don't want to stay illiquid in some sort of dead project. You're just losing money and you're suffering capital opportunity costs, meaning where you could have put the money instead of holding it into this particular project, right? This idea that people on YouTube and Twitter try to tell you that you only lose if you sell is a cope, okay? It's a cope that is fed to these retail holders during basically bag dumping season where people are trying to push a bunch of crappy projects on you and get paid to promote them so that you don't sell them, right? So you provide their exit liquidity. And all of the best altcoin investors understand that selling is how you win over and over again, right? You have to sell and take profits into Bitcoin or else you're not winning, right? That chart that I showed you at the beginning of this presentation where altcoins are going like this and Bitcoin is going like this is telling you that. Exactly, right? You're not making money holding altcoins. There's maybe Jose is on this call. I put this chart on here because of him, Jose Ruiz. I talked to you in late March, early April, and you told me that you were holding a position of Avalanche and that you didn't want to sell it under any means necessary. And I said, fair enough. Don't sell it and go to cash. Sell it for Bitcoin because it's underperforming Bitcoin. Guess what? You lost another 32% in the past, what was that, 3.5 months? By not selling this for Bitcoin and just holding an Avalanche. That's what I'm telling you guys. You told me, Jose, you told me I like the tech. I met the founders of this project. They're smart people. What happened here, right? You're losing money. You're getting sold on some narrative. Ondo, same thing. I remember talking to some of you guys in March or April about, oh, I'm just going to hold Ondo, my whole portfolio. I'm not going to buy anything else. I'm fine. You're down also 32% against Bitcoin right now. And Bitcoin's at all-time highs. right? You could have captured the upside of this position. Instead, you just held a dying altcoin. Right. This is why I'm trying to break some beliefs that you guys have that other people have drilled into you on YouTube that aren't true. Right. Sometimes you need to actually open your mind to the fact that you could be wrong and that there's another way to do things that is right. Right. And that is what I'm trying to show you guys how to do on this particular call. So I want to speak the truth, because there's many people in crypto, we call them thought leaders, who are consistently wrong. And the reality check that I want to give you guys is that these people don't care about you. Okay. You probably don't know who I am. You don't know what my day-to-day life looks like. I don't know what yours looks like. But the truth is, I actually care about you and I want to help you. These people don't care about you. They don't care about helping you, right? And the advice they're giving you is not helping you. All you had to do was hodl. Hodl what? Bitcoin? Maybe if you hodled Bitcoin, you were happy. If you hodled everything else, you're still in losses. You're not having a good time. Look at this. I saw this and I was like, what the fuck are these people talking about? This guy's saying, I don't understand how people can't see this as the spot to have absolute max exposure. Wait, it's because most people have either chopped their accounts to zero, got lost in the trenches, or can't recover from PTSD. And Alex Becker is going exactly this. What was Alex Becker doing this entire cycle? He was telling you to buy altcoins, buy every dip. This dip is the last dip. Altcoin season. Bitcoin's never going under 100K again. Like, he was just saying all these things. And like, I'm so sorry, but for some of you guys who either didn't want to pay for the right information or you just couldn't afford it, you listened to these people on Twitter for free and you just chopped your portfolios up, right? Like, and this is on this guy, right? Like, we should take these people to court and we should sue them for being wrong and for misleading people. This is not okay, in my opinion, right? Look at this guy. Alex Becker, if you're heavy in alts, you're going to be rich soon. Game's already over. Listen to this warning or you'll be wanting to drink battery acid this time next year. Many in crypto are grumpy and quitting. This is because they're retarded. No, it's because they've been listening to your shitty advice that you've been telling people to just buy every altcoin under the sun, all your shitty AI coins, all the coins that you've been paid to be promoting to your audience. And this is never going to happen to those coins because people figured out the game of capital extraction this cycle. Okay. And you sold the bag on them. This is bullshit, right? This is a crime. If this was the stock market, these people would be getting in a lot of trouble. Then you have Raoul Pal, who's, a pretty smart guy overall, right? Has a pretty good grasp on markets, been in the game for a long time. But, in 2021, and he left this as the pinned tweet on his Twitter. You can go to Twitter right now. It's here. He says, not on holiday yet, so I'll allow myself one more thread. The markets are crazy. NFTs are just JPEGs, dog coins, cat coins, Tesla, GameStop. Everyone is going to get burned. Don't they realize about discounted cash flows? These people are ruining everything. Green energy, crypto is a bubble, tech is a bubble, blah, 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 blah. He's speaking, basically giving rhetoric to people who are saying this is the top of the market. The metaverse is going crazy. People want to buy digital real estate more than they want to buy real estate. There's cat coins, there's dog coins. Tesla's going up like crazy. GameStop doesn't even exist anymore. Why are people buying this thing? And he's saying, no, this is a new generation of investors who got financialized in the US last year. They hit their prime, blah, 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 blah. Now they want to buy this. This was the top of the frickin' market cycle, guys. And this guy was saying all of these things are bullish. All of these things were capital B bubble signs, And this guy tries to position himself as a major thought leader in crypto, right? Charges a lot of money for speaking events, right? Flies around the world. Millions of people subscribe to his newsletter, all of his content online. And he's been wrong on so many of the occasions. I caught him on YouTube once from the last cycle saying, oh, Bitcoin should be at 250K by the end of the year. This was in August of 2021. Right? He's like, well, typically coins tend to the Bitcoin tends to, 5 to 10x in the last couple of months. I'm like, where are you pulling this information out of your ass? Like, where's the analysis behind this that's telling you that this is actually going to happen? So, I don't mean to crap on any of these people because that's not my job. My job is to show you that there's information out there that's not helping you. Okay. And it's very easy to get access to information that can help you. You just have to look a little bit farther. Okay. All of you guys have done yourselves a favor by being on this call today and spending this time with me because you're learning a lot of stuff that maybe you didn't know before, or maybe you realize it, but this is the call that finally drives those points home for you. But these guys have been so wrong. Right. And this will come back to burn them in the future. I can guarantee that it will come back to burn them. So I want to review some of the lessons that you guys have learned so far today before we jump into the next part of the presentation here and we go farther into some of these topics. Okay. Don't want to get lost, but these are the keys on what you need to know from this portion of the call. Okay. First of all, macro is everything. If you didn't know how to read the dollar and you didn't know how to read global liquidity, you wouldn't have known to size up like crazy over the past couple of months like we did in BNB. Okay. This is the dictator of all of the micro moves that you cannot see without seeing the big picture. Okay. From that point, you need to make sure your portfolio structuring is key. If you're just holding altcoins, you got wrecked from overexposure. Right? If you didn't have a core basis of Bitcoin in your portfolio, holding it together like the concrete of your portfolio, you've gotten rinsed this cycle, right? And what that tells you is that bag holding is dangerous. If you don't cut your losers, it costs people 5, 6, freaking 7 figures. I talked to one guy who joined BNB in April, and he said, I had $7 million and it was all in altcoins, and I thought it was going to go to 10, so I didn't sell. And it went all the way back down to 400,000. So just because he wanted the extra $3 million to get to 10 million, he couldn't realize that he was already close enough there with 7, and he didn't sell, right? He didn't cut his losers. When they started to go against him, he lost all that money, right? I've heard all these horror stories from you guys in my DMs on Instagram. Yes, it's me on Instagram. I read these DMs. I respond back to you guys. I send you guys voice notes because I'm trying to help you. And I see these horror stories, and some of you guys just like, it doesn't get through to your brain that you got to change your perspective, right? You've also realized that zero or low Bitcoin exposure is really dumb. Bitcoin has provided the best returns all cycle. It's also pulled back the least during any of the pullbacks that we've had. We've just explained this part. Don't listen to influencers. They don't understand the macro mechanics of the market, and they don't have your best interests in mind. They want to fill their bags. They don't care about your bags, okay? You want to listen to investors. You want to look for people that maybe aren't as big as some of those guys, maybe aren't as well known, who actually have, documented the fact that they've managed risk accordingly and adapted to the changes of the market when the incoming data comes in to tell them to do something different, right? Crypto is no longer easy, guys. Like if you don't have some sort of bulletproof strategy, you're going to fail, you're going to lose money, and you might as well just do something else, right? Like why would you waste your money, your time, and your attention on something that's not even giving you any ROI? Finally, the most important part of all of this, and it kind of summarizes it very well, is that you just must be objective, okay? You must go through the process a couple of times and realize, okay, well, what is real versus fake here, okay? What can I source in terms of good information that's not about how I feel about the market, but is the actual reality of the market before I make a decision? Okay. You want to be objective in your investing process. When you're objective, you make decisions based off of facts, evidence, reality, and no personal feelings. Okay. You don't use your opinions. You don't use your biases. When you're subjective, okay, you make your decisions based off of your feelings, how you feel about the market. I feel like the market's bullish, therefore I'm going to be a bull. I feel like the market's bearish, therefore I'm going to be a bear, right? Sometimes the first few things I'm coaching people through in BNB is just how to just break this relationship they have with their emotions that's just killing them when it comes to their investments. They sell the bottom, they buy the top consistently, right? That's what they've been doing previously. And I'm going, whoa. You're not listening to a system, you're listening to your emotions. We have monkey brains as humans. They're not designed to make smart investing decisions. They're designed to protect us from threats, right? The market is always a threat. Okay. When it's max opportunity, you don't realize it because you're scared. Okay. So you must learn how to become an objective investor in order to be successful, because there's no way of getting around this, right? You will not be successful in investing if you can't be objective, or just hold Bitcoin, right? That's an easy way to win. Why? Your portfolio doesn't care about your feelings, as many of you guys have learned, right? You could have felt bullish on, whatever coin didn't go up for you, right? You didn't change your thought process. You weren't willing to unmarry the position. You weren't willing to change your bias because the data changed and you didn't feel like it was worthy of changing your position. So some of you guys might be asking, then why are we even here then, Luke? Like, why have you just spent the past hour, basically shitting all over us and our strategies and, helping us realize the fact that we don't know what we're doing? And the truth is because we don't own enough Bitcoin. Okay. None of us own enough Bitcoin. It's not too late to accumulate more Bitcoin and have a strategy that allows us to accumulate more Bitcoin. But Bitcoin is the winner here, guys. Okay. And you need a crypto strategy that allows you to accumulate more Bitcoin. Not worry about what meme coin is going up next or what altcoin you should hodl for the rest of your life, or, set price predictions on XRP. None of us own enough Bitcoin. And that's why we're here. And that's ultimately why we're in crypto in the first place. And all the other people that are in crypto is because they want more Bitcoin. There's 21 million Bitcoin. Think about this. There's 93 of us on this call right now. There's 21 million Bitcoin, right? 21 million Bitcoin. There's less Bitcoin in existence than there are people that live in Canada where I grew up, right? It's crazy. There's not enough Bitcoin for all of us to own it. None of us own enough of it. And that is what our focus should be on as crypto investors, is the fact that we don't own enough Bitcoin. Bitcoin has been fully legitimized now. ETFs, asset managers are buying it. The dollar's going down. This massive debt spiral and huge spending bill has made people realize, I got to get my money out of the dollars, because they're just printing dollars like there's no tomorrow. You got to get into a harder currency. That's Bitcoin. And even most recently, in these sort of global mini crises that we've been seeing, the Middle Eastern war over the past couple of weeks, even, the sort of thing that we saw with the tariffs or all that sort of stuff, Bitcoin rebounded so resilient. It's starting to show us that it's much more neutral. It's much more borderless, and it offers this protection where other traditional systems fail. Imagine if you lived in Israel, or if you lived in Iran, or maybe some of you guys are on this call and you are in these places over the past couple of weeks, and you wanted to get out of there and take your money with you. You know how difficult that was? I have a client of mine who had to leave Israel on a boat to go to Cyprus, was not able to get money out of his bank there. Big issues, right? Like barely even able to really leave the country effectively other than on a boat. And this guy's a very successful guy, right? And he's going, I don't have enough money in Bitcoin because clearly I can't take my money with me when I need to leave this country that I live in, right? Just realize that we're at the will of our governments in this life. We don't control what conflicts start and stop. We don't control what parts of the world are, abundant to live in versus, quote unquote, excuse my French, total shitholes, and our governments are fucking us over. We don't have control over that, right? But what we do have control over is where we go, okay? And where we take ourselves and where we put our money and how we take our money with us through this life. And that is the beauty of Bitcoin, okay? So I didn't do this presentation to shit on you guys and your strategies. It's more so to wake the fuck up and realize that there is a time and a place for us to get serious about our investments, and that time is right now. This is the time for us to wake up, get serious, own more Bitcoin, and stop messing around with altcoin strategies that don't make us money. If it doesn't make us money, move on, right? I'm all for altcoins when they're making us money. I'm all for things like Hyperliquid, which, pop up and you get, boom, nice period of outperformance. But, just bag holding Ondo or AVAX for the sake of the technology, it's not going to cut it, okay? This has all become so evident in the past couple of months. Before we get into the next section of the call, I'm just going to take a quick sip of water here, and then we're going to break and go into the state of the current market, right? Because all this information that I've given you guys is great, right? But it's not necessarily relevant to what are we going to do for the next couple of months, right? Obviously, people in BNB are going to know what to do. I've already laid out the game plan for them. I want to lay out the game plan for you guys. It's very simple. There's a few outcomes that could happen. We want to take advantage of them as investors. First of all, let's wrap up Q2. Since the beginning of this current quarter that we're in, Bitcoin is up 30%. That's pretty amazing, right? Ethereum also up 30%, meaning it's been matching pace with Bitcoin, even outperforming it a little bit recently, something to make a note of, right? The first time in the entire cycle that we've seen Ethereum outperforming. We've seen Solana up 17.5%, which means it's underperforming Ethereum. Most importantly, it's underperforming Bitcoin. So if you've been holding Solana, you've been losing, like I explained to you. And XRP, for all my XRP maxis out there, is only up 5% since the beginning of the quarter. Okay, so the conclusion here is that Bitcoin is dominating in this market right now where the broader altcoin market struggles. Okay, and Ethereum potentially is working on a possible comeback for a couple of reasons that I'm going to explain to you in a few minutes. Okay, let's talk about quarterly performance. Let's examine why quarters perform better than other ones. Now, historically, Q3, which is the quarter we're going into, which is July, August, and September, is the worst performing period for financial markets, especially for crypto, but not always. Okay, not always, but usually the worst quarter and worst for crypto. What we see is usually a liquidity contraction heading into Q3. We see trading volume slow down. We see this summer holiday effect kick in. Retail starts to log off. Institutions, have holidays. People do stuff in the summer. They want to take advantage of the nice weather for most people. And what we see is that the seasonal performance of Bitcoin decreases dramatically in these months, right? July, August, September goes into the red. This quarter is the air gap in the rest of the year. But that air gap provides a lot of opportunity for the fourth quarter where we see the most outperformance, right? It's October, massive outperforming month. November, massive outperforming month. December, good performing month, right? And then we get into Q1 where there's just good, steady, stable performance usually until we get to the summer again, right? We call this period of market decline the summer doldrums, okay? And you guys might be wondering, well, why do we even care about the summer? Like, why don't we just forget about crypto right now? It's boring. The altcoins aren't doing anything. Let's just come back in Q4 when things are exciting. You don't forget about this period of the market because it's what sets up the stage for Q4. If you guys were diligently investing last summer and DCAing Bitcoin every single week like I was last summer, come Q4, you were very happy when Bitcoin hit 100 grand because Guess what? You've been DCing Bitcoin at 60, 55, 50K, back to 60, 65, and then boom, next thing you know, your portfolio is up double by the time you're at the end of the year. Now, if you just forgot about it and you bought back into the market when we were, basically back at all-time high, 75K, your upside was way more limited, right? Look at Q4. When you look at Q4, this is monthly returns. Look at how much outperformance we've seen in this fourth quarter. Octobers are amazing months, right? Massive outperformance. Septembers are crappy. August are usually crappy. Julys are a mixed bag, right? Junes are also a mixed bag. But this massive outperformance in the fourth quarter is what we all need to get prepared for. So regardless of whether this summer is bullish or bearish, Q4, based off of the history, should be a very good performing quarter. And we need to set ourselves up for that. We don't need to worry about summer plans and trips and looking cool on Instagram. We need to get organized for getting ready for Q3 to crush Q4. I've talked about this, but this is not that important. The main theme here is that there's a summer slowdown in markets. It happens every single year for the most part. Sometimes it doesn't happen. The key thing to understand is that when unexpected headlines or political events, central bank actions, et cetera, happen on thinner liquidity, on thinner trading volume, they're amplified throughout the market. So August of last year, we saw the yen, the Japanese yen carry trade unwind, and it sank the S&P 500. It sank Bitcoin to yearly lows. And that happened because there was very, very thin liquidity in the order books. Many people were logged off. Me, for example, that morning that I woke up, I was in Greece. I was about to go on a yacht for the whole day. I went on the boat trip. I could not get off my computer for the entire day. I was connected to Starlink on the computer because the market was dipping, right? This is what happens. People go on vacation. The next thing you know, thin liquidity. There's not as many buyers, not as many market makers, institutions. The market falls apart. Okay. So we always need to be able to flip the switch on and say, okay, there's opportunity in the market. Let's take advantage of it. Those were good buying opportunities in August when the market was really, really low. Okay. Us as investors, if we have our money in the market, we need to stay diligent for all these developments that can happen over the summer. I'll give you a recent example, conflict in the Middle East, right? Very quick dip and rebound. There was an opportunity to buy there. Right, there's a very good opportunity to buy there. Many people thought, oh, this is the beginning of the summer weakness. We're screwed. Let's sell. There's not going to be any upside anymore. Boom, look at the market, fully rebounded, right? So recent example of this, when there's thinner liquidity, when there's less interest in the markets and people start to pivot to summer, you can already see the trading to volume declining on the chart right now. When there's periods of volatility from news, it hits the markets a lot harder, okay? With that being said, I want to talk about geopolitics versus markets. I know the title of this masterclass is War versus Markets, and we haven't talked a whole lot about war yet, but what I'm going to reveal to you guys in the next couple of minutes will explain why I called this call War versus Markets. But geopolitics versus markets specifically is an interesting one. We saw this event happen between Israel and Iran over the past couple of weeks, and it does create the short-term volatility in the markets, right? People want to flock into safety haven assets. They want to go to gold. They want to go to dollars, et cetera. What we saw during this one, which was really interesting, is that nobody wanted U.S. bonds. Again, showing us that the bond market is falling apart. And there's this massive grand plan going on by the Treasury Department and the Trump administration right now with crypto. And I'm going to explain it to you in the next couple of minutes. That has to do with fixing the bond market, and they want to plug the hole with crypto. And I'm going to explain that relationship in a second. But what happens is we have these quick influences in markets based off of news. The markets sell off, and it doesn't really do anything over the long term of the trend. It's just sort of a quick buying opportunity or a quick panic event for people. And then next thing you know, we're off to the races. Now, historically, an event like this mixed with the summer doldrums and usual liquidity declining going into the third quarter would have pushed markets down by now, and this sort of would have kicked off the summer sort of decline. We saw end of June last year, markets started to go down a lot. July was a crappy performing month. August was brutal. September was brutal. It was a classic summer doldrums. However, Biden was in office, okay? And he was less unpredictable. Now Trump's in office and he's very unpredictable. And his influence this year has caused the dollar to decline massively, okay? And it set up the stage for a really interesting summer for us, okay? So we have to stay flexible and adapt to unfolding market information versus just relying on historical patterns. We can't just assume the market's going to be bearish because that's what the history tells us it's going to be, especially going into this particular quarter in this year, okay? But why should we expect anything different? Okay. Everyone expects a boring and red summer again for markets. Most people that I talk to are like, yeah, the summer's going to be crappy. All of that bad economic data is going to start to come out. The summer's going to be bad. And maybe that's a valid point. Okay. Maybe we are going to have a crappy summer and we're going to see a good sized dip, which would be an amazing buying opportunity. In fact, I would be the first one to tell you that I would prefer that because I could buy more Bitcoin if we had a dip this summer. But if we don't and everyone gets caught off guard, what's going to happen? Okay. I see something very interesting shaping up here. Okay. There's a very particular setup that, some investors are seeing in this market. And it's the fact that the world is at war against the US dollar. So you guys thought I was here to talk about Israel versus Iran and then its impact on the crypto markets. I'm here to talk about the global war on the US dollar. Right? The global war on the US dollar is the fact that it's been declining rapidly. People don't want to buy US bonds. They don't want to buy and hold US dollars. They want risk assets. They want stuff like Bitcoin. And this is painting the ultimate setup for the summer. Okay. I'm calling this the heat wave rally if it happens. It's not guaranteed. Okay. I'm not saying the markets have to explode, but there's a very clear argument to be made that the markets could explode this summer based off of these factors. First of all, the US dollar has been selling off very hard, as I showed you. When the dollar trends lower, risk assets typically fly. Okay. Bitcoin is one of the biggest beneficiaries when global capital starts searching for this protection against the decline of the purchasing power of fiat like US dollars. Then we have Trump, who's effectively captured the Fed at this point. He's wrapped his arms around Jerome Powell and says, listen, you are going to cut rates or I'm going to rip you out of this position. And the next person that I put in this position is going to be willing to lower rates or I'm not going to put them in that position, right? The message here is clear. The rate cuts are happening. The monetary policy is going to be easing and markets are forward looking. Okay. It's not the day the rate cuts go into effect, the market pumps because the money's getting cheaper. It's when we can officially anticipate the fact that the market is going to get a rate cut is the point where the market's going to start to grow. Now, the market's already been pricing in rate cuts. It knows that policy is going to ease soon. Trump knows this. Trump is trying to assert fiscal dominance over the Federal Reserve. Then we have Scott Bessent, who's very quietly in the background of the Treasury Department running the show. We call this Yellenomics. Remember Janet Yellen? She ran the Treasury in the Biden administration. You remember her? She came up with this amazing concept of supplying liquidity to markets that nobody could even detect. We called it stealth QE, and it's short duration treasury bonds, T-bills, very quick maturing debt that banks love to buy. So the government basically prints up all this debt and sells it to the banks very quickly. Janet Yellen came up with this. We call it Yellenomics. Now, Scott Bessent was quoted in December of saying, I don't know if I want to do this. I don't think it's sustainable for markets. It provides a little bit too much liquidity. That the asset markets are too propped up on this. Guess what? He comes into office. Him and Trump don't change a damn thing. They're doing Yellenomics 2.0. This means that short-term debt issuance is going into the markets, and this is front-loading the market with liquidity. Essentially, it's a soft pivot towards what we would call reflation, where we go into a reflationary environment where inflation starts to accelerate again, right? That is fuel for risk assets to surge. That is fuel for easier monetary policy in combination with rate cuts to drive markets higher. Then we have the big, beautiful bill. We have tax cuts. We have expanded deficits. We have direct injections into the economy. All this is on the table. This is stuff that stimulates markets. This is the stuff that made the stock market grow under Trump's last presidency. And when that bill passes, it could be as early as July 4th, guys. It is game on for people to start spending their money, saving more of their money, seeing their businesses grow, potentially rate cuts come in as well. And all of this sets the stage for markets to go into euphoria at some point later in the year or early next year. And risk assets, as we can see, S&P's at new all-time highs, NASDAQ's at new all-time highs, Bitcoin's at new all-time highs. They've been sniffing all this out really early. They know it's coming, okay? Meanwhile, crypto Twitter is bearish. Bearish as it's been all year. People are underexposed, specifically to Bitcoin. Everyone wants a really big dip to buy. People are fading the strength of the market right now. They're calling altcoins dead, which they are, okay? But they could rebound when monetary policy gets loose again, okay? But equities are heading into price discovery and Bitcoin's at all-time highs. So like, what's going on? What is this disconnect? Why can't altcoins pump? Why can't crypto Twitter understand what's going on? So they're not looking at this. They don't understand this heat wave rally setup that I've pointed out to you guys is so bullish. It's just going to take a sec to kick in. And when it does, the market's going to light up. Okay. Not every altcoin is going to light up, but there's going to be a handful of outperformers that are going to do numbers against Bitcoin. Okay. Dollar weakness, reflationary policy, underpositioned participants in this market, and people disbelieving that this rally is really real is the potential for a perfect storm for markets this Q3 when everyone thinks things are going to fall apart again. Okay. Now, here are the cherries on top. This is where things get really, really interesting for the market. And this confirms everything that I've just talked to you guys about in terms of making this a very probable scenario for the markets. First of all, fiscal policy is primed. Okay, here's Scott Bessent saying we were very close to a deal on the one big beautiful bill. What I'm telling you is not just coming out of my ass. I'm telling you that they have tax cuts that are going to come in. They're not going to tax you on tips. They're going to be able to expense factory equipment, meaning people are going to get all these tax cuts. They're going to keep more of their own money. When people keep more of their own money, they invest more, they spend more, the economy grows, right? They want to unleash American energy production. They want to secure the border. What does that mean? More government spending. More government spending means more money printed and going into the economy, going into the markets. This guy understands what's going on. Theory for the rest of the Trump presidency and beyond. Rates will come down to 1%. Money market funds have $7 trillion on the sidelines who will rush deploy as rates come down. Businesses want to stimulate, Big Beautiful Bill wants to stimulate with $5 trillion. Tax cuts will give people more money. Deregulation will allow more risky activities. Supplemental leverage ratio will be reduced by the Fed, meaning the banks can be a little bit riskier. We will blow the mother of all bubbles. Asset owners will love it, and then we will get into any. Okay, so basically saying we're going to head for another massive asset bubble because all of the signals are pointing towards that happening. All of this debt, all of this policy change, right? All this economic growth that's going to be created by this bill. Fiscal policy is primed to have a summer heat wave. And then we have the Genius Act, okay, which I was kind of wondering, like, why is the Genius Act called the Genius Act? And of course, it's an acronym, but the fact is that it is brilliant. It is brilliant. You have this massive decline in the demand for U.S. government debt, right? The bond market is falling apart. The yields are sky high, although they have been coming down recently, which is good for the government in this case. Scott Bessent, Donald Trump, the Trump administration, they know that nobody wants U.S. government debt anymore. But if we want to make America the crypto capital of the world, and everybody else wants that, all the crypto companies want that, Coinbase wants that, Tether wants that, it's all good for their business models because guess what? America is the largest economy in the world. If we regulate stablecoins in the U.S. and we force them to buy our bonds to back the stablecoins, we're going to fix the bond market. We're going to plug the hole in the bond market because the demand for bonds is going to go up. The yields are going to go down. We're also going to cut rates. If we can't cut rates until there's demand for the bond market, or else if we cut rates, the dollar is going to keep going in this tailspin lower. All of this stuff, genius, right? He's saying it here. Recent reporting projects that stablecoins could grow into a $3.7 trillion market by the end of the decade. A thriving stablecoin ecosystem will drive demand from the private sector for U.S. treasuries, which will back stablecoins. This newfound demand could lower government borrowing costs and help rein in the national debt. Now you guys can see why the government cares about crypto. It's because it's stable coins that can fix the bond market issue in the US. They need the demand. They need to create the demand for bonds, or the Ponzi that holds up the US dollar falls apart. Okay? If you hold Bitcoin, you win either way, is what I'm saying. But if you don't hold Bitcoin and you don't understand this, like I would say 90%, 95% of Americans, then what they don't realize is that their dollar purchasing power is going to go down. Even if they fix this, it's still going to go down. Okay? This is a good thing for Ethereum, okay? 50% of the world's volume of stablecoins is on the ETH blockchain. We talked about this a month or two ago in BNB. The fact that the Genius Act is good for Ethereum and maybe is going to be good for DeFi coins very soon, right? And he's saying here, the Senate just passed an incredible bill that is going to make America the undisputed leader in digital assets. Nobody will do it better. It is pure genius. Digital assets are the future. It is pure genius because they figured out how to plug the hole in their government debt demand with stable coins, forcing Tether, forcing USDC to buy all of this debt to back the stable coins. It is genius. Again, another massive bullish catalyst for the market. Then we have Bitcoin as banking collateral. What this does is allow people to actually think, well, you know what? Maybe I will buy a lot of Bitcoin because I can actually use it as collateral with my bank to get a mortgage or to do a loan or to do anything I want to do with a bank as proper collateral in this case. This is crazy. The U.S. Federal Housing Finance Agency, the FHFA, issues order to count Bitcoin and crypto as an asset for mortgages. Okay? They want to be able to allow people to mortgage a house with their Bitcoin. This legitimizes the long-term holding plan for most people because, you know, like myself included, what do we do with this money? Eventually we want to turn it into harder assets, real estate, things we can live in, things we can rent out, things we can diversify our portfolios with. Bitcoin can be banking collateral. And the real truth here that I also believe, and I don't necessarily think this is known by many people, is that the banks want to steal your Bitcoin. And now they literally can steal your Bitcoin when you go and apply for a mortgage and you want to use it as the collateral. Price of Bitcoin goes down. What are you going to do? Put up more? Or are you going to get liquidated and lose your Bitcoin and lose your home? It's not going to happen. So these banks know, hey, Diabolical plan to steal people's Bitcoin via price suppression and liquidations. 21 million Bitcoin. How are we going to get our hands on it? We better start allowing our customers to give it to us. That's what you do when you have a bank account. You take your money and you say, here you go, bank. It's your money now. You do whatever you want with it. And then when I come back to you and I say I want $100,000 wired to here to do this, you can hold it up for 7 days with paperwork and make me fill out this and ask me if I'm doing money laundering. You're like, what the hell is this all about? This is my money that I put in the bank. Why are you trying to tell me what to do with my money? What you don't realize when you open that account with Chase is you signed your money away to that bank. You said you can do whatever you want with it. It's yours. That is the truth, guys. Bitcoin allows you to own your own money. The banks are going, hey, we want to own more Bitcoin. Give us your Bitcoin, right? You want to buy that house? Give us your Bitcoin. We'll get you that house. No problem. Then this is the ultimate cherry on top. Okay. Everybody take a deep breath. This is a big one. Nobody cares about crypto right now. Nobody. Look at this. Look at this chart. Mindshare is non-existent. We're all the way back down at levels that we were at last summer, and we weren't at all-time highs, right? Even during the middle of summer, we had higher mindshare than we do right now. Most people jump into crypto when mindshare is all the way up here, like in Q4, and then they give up here. Or they jump in 2024 in March, and they give up down here. What if you flip the script and you get serious when mindshare is low and you get defensive when mindshare is high? Okay. This is telling me that there is all of the reason in the world to expect markets to do well from this point forward. Maybe there'll be some hiccups. Maybe we'll have a crappy summer. Maybe I'm completely wrong. I'm open to it. I have a strategy alternative to this. But if we don't see that and we see a massive pump, all of this was laid out for you to see, right? No mindshare. Nobody cares about crypto right now. It's amazing. So with that being said, I want to give you guys my strategy so that you can copy me. Okay. First of all, I have a very specific top-down approach to markets. I look at the macro, just like I told you at the beginning of this call. We went through the macro, and then we go all the way down to the micro, which is the stuff we just went over. Okay. I start by taking this very zoomed out look at the market and the big picture data, because that's what ultimately moves the price. Okay. You want to look at things like unemployment rates. You want to look at inflation rates. You want to look at central bank meetings. You want to look at Treasury quarterly refunding announcements. You might as well be wondering, like, what is all this stuff that Luke's talking about? This is not related to crypto. I've never heard anyone talk about this stuff in crypto. Guess what? Crypto is an asset that's global. Okay. It responds to changes in money supply. It responds to changes in global liquidity. It responds to changes in all these things. It only makes sense to be looking at the stuff that influences the market, not just within crypto. Okay. This data allows me to determine the overall conditions of the market. I have this great analogy for this. You know, if you're going sailing, you want to look at the wind conditions. How do you position your sail to capture a good, time out on the water? If it's really stormy, you're going to pack up the sail and you're going to hide for cover, right? Or maybe you're going to go back into the harbor. But when the conditions are perfect, you're out there, you're sailing. If you're reading the macro, you know the wind conditions of the market, you know how to adjust your sails. Okay. Once I have all this information, I can work my way down from the macro data on these higher time frame charts, and then I can move into micro, and I can move into the low time frames, and then the whole picture comes together for me. From that point forward, I'm using my software tools, Alpha AI. This is my tech stack. This is the biggest edge I have in the market, because guess what? The system knows how to read the market without being biased. It's objective. It's not subjective. I have a buy and sell signals algorithm that reads the market in real time and issues buy signals. Last summer, when everyone was panicking in August, this system issued a moderate buy here at 52,000. Then when everyone was getting insanely bullish in Q4 of last year, it was saying, hey, time to reduce risk, right? The system is incredibly accurate at timing these peaks and valleys. Even the most recent peak before we had that summer decline, it said, hey, good time to de-risk, right? You can see the signals here, August 5th, 52,000. This delivered to my phone here and everyone else's phone in BNB. Buy Bitcoin. Weak sell signals here, early December. Sell Bitcoin, sell crypto, right? We use this system in BNB to pinpoint all of our lump sum entries and our exits. And what it does is it cuts through all of this noise on Twitter, all this shit that Luke Belmar and all these people are talking about. It doesn't matter. Look at the system. What is the system telling you to do? Do nothing, buy, or sell. There's only 3 outcomes, right? Very, very key system to have up your sleeve. Then we have our daily risk metric. And this allows us to time our DCAs or our DCEs out of the market. Dynamic dollar cost averaging, buying more, or dynamic dollar cost exiting, selling more. This adds a lot of confluence to the signal. So you can see we had this signal on August 5th, buy signal, boom. August 6th, low risk reading on the metric. So it tells you, hey, this area that we're in right now, this is a really good time to be accumulating more. This whole system is ranked 0 to 1. When it's down here, at 0.29, 0.3, it's in the lowest risk category that it can be in on the chart. That only happens during market bottoms, right? That's what we saw last summer. We saw a market bottom as indicated by this system because it knows how to read the market and tell us what the risk is, right? What is the relative risk in the market? So we use the system to buy more. We use it to give us confluence with these signals that we get. And it analyzes many, many points over the market and uses an algorithm to amalgamate all the data and tell us what we should be paying attention to or what we shouldn't. Now, in the same notion that it tells us when the bottom is in, it also tells us when the tops are forming, right? We get very overheated. We get up here into the 0.7s, the 0.8s, and the market cycle ends, right? This is very crucial to have both of these pieces together to take profits or to buy into the market, right? It provides an edge to you as an investor, and you need as many edges as you can have in this market because it's getting more challenging week after week. You can see here in the previous market cycle, right? We bought at the bottom, November 9th, 2022, we're buying Bitcoin here at 15,880. We got another one up here. I think this was at like 18,500. This was the bottom of the market cycle. This system called this in real time, right? It also called all the other good buying opportunities in this bear market accumulation period that we were in. Imagine only having to buy 1, 2, 3, 4, 5, 6 times, and your whole Bitcoin position is built at the bottom of a market cycle. Boom. It's a no-brainer not to have this, right? Bitcoin risk metric, same thing. This was all in like 0.2, 0.25 risk readings. Then summer 2021, for example, look at this, right? This was the summer doldrums, taking advantage of the summer doldrums, boom, 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 buy signals, then starting to exit in Q4 when the market is overvalued. You need systems like this because investors like me are using stuff like this to beat you. So my system is a combination of the signals and the risk metric to tell me exactly what I'm going to do with my decision-making process. With my signals algorithm, I'm going to determine my larger lump sum entries or exits across the positions in my portfolio. And with the risk metric, I'm going to determine how much am I going to put into crypto this week, if any, right? Or how much am I going to take out of crypto this week, if any? It gives me that confluence. I'm going to be buying and selling larger positions based off of the signals, and I'll DCE or DCA based off of the risk metric to tell me when I'm going to be getting in or out of the market with smaller amounts of my portfolio. So here's an example of both of these scenarios. I'll use a moderate buy signal to accumulate a larger amount of my sideline cash into a position, so mainly Bitcoin or maybe whatever altcoin is outperforming at the time. Or if I get a 0.39 risk reading from the risk metric, I'll use a portion of my monthly income. Whenever the day that gives me this signal, I'll get into the market and say, okay, maybe I'll add extra couple thousand to my position this week based off of this risk metric. Or maybe it's a lot. Maybe it's 10, 20, 30,000 to my positions based off of how good the risk reading is in the market. If you don't have a system like this, you're not beating investors like me. Now, second to this, I have a portfolio design process that makes it really difficult for me to lose money regardless of what happens in the market. I call this split core and casino. Some of you guys have probably heard about this one, but if you haven't, here's how this one works. My core portfolio is 70% of my total crypto holdings or DCAs, meaning anytime I put money into the market, 70% of it as a rule has to go into this portfolio. Now, the allocation of this portfolio as of now is Bitcoin only. Okay, it used to be able to include things like Solana and Ethereum. Then they just started underperforming like crazy, and I changed the rules. I said 70% into Bitcoin. I'll let the casino portfolio go out, provide the altcoin outperformance to sell back into more Bitcoin. Now, the beauty of having such a big position in Bitcoin, as you all realize, because Bitcoin's been going up like crazy, is it does the heavy lifting without any sort of sizable drawdown or guesswork. My portfolio has been going like this the entire cycle. It's been going up and up and up and up as a result of having a lot of Bitcoin in the portfolio, okay? And when you find those periods of outperformance, you allocate to them in the casino portfolio. This is where I leave 30% of my portfolio in cash or a mix of altcoins that are actively outperforming Bitcoin to be able to do what? You guessed it, buy more Bitcoin. It allows me to position for Bitcoin outperformance in higher risk positions when I'm using less capital. So I don't go out and I throw my whole portfolio into hyperliquid. I take a small fraction of the portfolio and I aim for outperformance. I sell it, I move it back into Bitcoin, right? Very simple. Now, I want to show you guys a couple of my winning moves and positions as a result of using and developing the system over the past 6 years. I was able to allow me to buy Bitcoin in 2022 and 2023 with an average cost basis of $27,000. As of right now, that position of Bitcoin, that core allocation of Bitcoin that I have is up 4x. Right? Most of you guys didn't 4x your portfolio this cycle. And at the beginning of the cycle, you just said, that's crappy performance. It's not. When you have sizable capital in the market, 4x is better than anything else you can invest in, right? Bitcoin buys just recently this year, adding to my portfolio this is the second time I added big portions of cash into my portfolio was this year after 2023, was actually buying Bitcoin on this massive dip that we had in Q1 into Q2. My average entry was about 80,000. I started to deploy funds from previous sells into the market here at about 82,000 here on Bitcoin in late February. Then I started to buy more based off of DCAs. I turned on my weekly DCAs here because the risk metric was really low. Started to buy more here. This is at 78,000. It's kind of hard to read, but that's the price that Bitcoin was at here. And you can see here, low risk buying on basically the bottom of the market, 78,000, here 76,000. These are all DCAs for me that gave me an average cost basis of Bitcoin this year at 80,000. Well, Bitcoin's sitting at what, 107, 108,000 right now? That's up 34%, 1.3x in 90 days, right? That's really good performance in a short period of time to stack on top of this larger core portfolio of Bitcoin. Then we bought Solana in 2023. Again, all these plays were posted in BNB, by the way. That's why I'm timestamping them for you. This is my announcements channel in BNB. Sold this for 500%, okay? Big position here, $37 to 185. I started buying it in July, stacking more on these buy signals in late August, early September here. And then we started to ride Solana while it was outperforming Bitcoin and sold it most recently while the altcoin market was breaking down in early February. For an average exit, there was 2 exits. In combination, we sold it for about $185. For me, it was a 5x in Solana, which I'm very, very happy with, okay? Then we bought Coinbase in 2023, and we did numbers on stocks that you don't see in a year and a half. We did performance that you see across a decade in the stock market, 345%, 4.5x on Coinbase. We started buying here in 2023. Okay, I started talking about Coinbase here in BNB. Boom, buying more. We rode this thing for 345% from the late spring, early summer of 2023. Stacking more all the way up until we sold it here before the market really broke down in February. Okay, this was a massive position in an equity, right? Most people think, well, to make money in crypto, got to buy altcoins. No, crypto stocks. Let me give you another example. MicroStrategy, I just think this one's on the next slide. We bought for a 7x gain, 692%. Started to buy it here, sold it for $336 a share, all the way here when the market started to break down in February, right? We bought it here early October. Amazing performance from crypto stocks. These crypto stocks traded better than altcoins this cycle, right? And none of you guys even realize that because you're only looking at altcoins. Then this year alone, we started to buy Coinbase again after selling out of it at 265. I started to rebuy back in at about 203, 208. Then I bought more at 250. My average Coinbase entry price is 221 as of right now. 1.6x in less than 2 months just from holding this position right here. Started to rebuy it in early May. Literally the next week, this thing gets added to the S&P 500 and is the first major crypto stock in the US. And this has just sent this stock ever since, especially with the introduction of Circle and the stablecoin bill, the Genius Act. Like, this position has performed insanely well in the stock market and everyone's FOMOing into it now. We were early on it, right? I didn't know it was getting added to the S&P 500. I just saw it. It looked undervalued. Did my analysis on it. I want to hold this for the long term. I gave the signal to everyone in BNB. We sized up on it, 1.6x. Then we recently bought Hype with the same system. 10% position in our portfolio, sold it for 63% gain, as I showed you here. Then I sold it right here, selling all Hype. This was less than a month, right? Very quick in and out, outperformed Bitcoin, 1.6x, sold it at the highs. It's still not back up at 41.90 since we sold it. Decided to reward myself with a Daytona as a result of this trade. Take a small percentage of the profits and bought a nice watch for myself. So this is what you got to do in crypto. You got to look for outperformance, and then you got to reward yourself based off of you winning. In this case, this has been some amazing wins. If you go even farther back, buying Grayscale for 1.8x while it was undervalued against Bitcoin, possibly one of the best calls I made that saved people the most money. Again, I'm here to make people money, but I'm also here to save people money. That's very, very important in BNB, was selling all altcoins in early February 2024. Early February 6th here, reducing all altcoin positions. Boom. Right? This is where I started to sell half my Solana. I sold the rest of the half of Solana the week later. This saved people in the group a lot of money. This saved people I saved myself a lot of money of downside because I could see the market was falling apart. If you were on my last masterclass, you know why the markets fell apart. I showed you why. I showed you why I sold, right? Guys like Josh in the group de-risked Solana at the highs. saved a lot of money for people like Dave Sidey, right? And then here, markets rebounded really quickly and everyone thought, oh, the bull market's back on. I said, no, I doubt this is an organic pump. The macro conditions do not look favorable. And guess what? The market rolled back over again. This was a huge winning move. I had some people text me and say, I saved like $500,000 as a result of getting out of the market. Thank you so much. Right? Like these are what happens. These results right here are what happens when you have a winning system, when you have a winning strategy and you have experience in this market. Okay. Now, when you have winners, you're always going to have losers. And people who don't show you they're losers are lying to you because there's no such thing as everyone doing perfect numbers and perfect multiples in these markets all the time. It doesn't happen. I've had losing positions and moves in this cycle. One of them was holding ETH for too long in mid 2024, right? I held it for longer than I needed to from sort of the beginning of the market cycle until I think it was here, September 7th of last year. I decided to swap all of my Ethereum into Bitcoin. Now, if I hadn't done that, I would have lost another basically 50% in Ethereum against Bitcoin. That was a very smart move. So the thing is, when you make a mistake, you got to pivot to making a stronger decision as a result of that. Boom, got out of Ethereum. It was underperforming Bitcoin. Again, here, I held Beam for too long, right? I thought gaming was going to be a narrative that came back, and I didn't realize that it just wasn't going to be the exact same market cycle that we saw previously. So I ended up holding this longer than I needed to. Now, given small portfolio position size, like 5%. This doesn't equate to a really big overall loss. I'm very good at risk management, but again, didn't need to hold this position, right? And then I converted it to Sui and Tau, and I was able to rebound a lot of those losses in Q4 when I did this move in early October because those coins started pumping, and guess what? Beam did not. Okay. Now, even most recently, swing trading Sui and Sol in the group, right? Same time I bought Hype, which really performed well. I bought Sui and it underperformed, right? And I ended up actually selling Sui for a 1% loss of the total portfolio, about 20% loss in the overall position size that I was holding. Again, like when you lose money in the altcoin market, most people don't lose 1% or 2% of their portfolio, right? They lose like 15, 20, 30%. So when you have risk management like this, your portfolio doesn't get out of control where you can't actually hold on to what you have and reposition for upside with a new opportunity. Okay. So I do have losing positions, right? People have experienced losers in BNB, but this is the majority of what we've experienced as a result of this system is massive outperformance. Okay. And it's led to some massive success stories. Guys like Pablo, for example, who's one of my private clients, made $250,000 in a month from Hyperliquid. Now, given he has a large portfolio, he needed somebody to help him, be guided through the process. But there's some of you guys in this call right now with large portfolios like this guy that could have done similar numbers, right? This guy in my group as well, he's a trader. He watched a market update that I posted on a Saturday morning. And I said, watch ETH here for a bounce. Things are looking good in the market. He ended up getting into a leveraged long position, which is something I don't personally do. And he made $125,000 in a weekend doing this. Okay, this is real results from the group. He texted it to me. He was like, hey, man, BNB is on fire. Love it. Nick, same thing. Guy in BNB here. I have a lot of people in BNB just in my personal contacts because I'm actually a real person. I don't hide behind a screen saying, hey, I hopped into Hype, did really well. Thank you very much. Max, you joined in March. He, like in the first 2 weeks of his membership, he traded and made his whole membership fee back based off of buying, what was this? A NASDAQ short, I think. So again, sometimes we talk about crypto, sometimes we talk about stocks. Last day made almost 30K from Hyperliquid. This was a couple weeks ago. He was up like 10K on Coinbase, 18K combined. And then I think he sold out of this so he's probably up about 40K, 50K as of right now on these most recent picks. People make money in BNB. People that pay attention in BNB that have the right capital to do it properly make money in BNB. These guys in particular joined during a boring period of the market last summer, Dave and Matt in August, and they crushed it because they positioned, when I showed you that chart of crypto interest dwindling, they bought at a low and they started selling at the highs. Okay. Bobby, who's been one of my private clients since almost the beginning of my history running BNB, did 5X in his first year and 3 months working with me in BNB as a private client. He actually put this watch on his vision board when we first started working together. It's a $250,000 Audemars Piguet. He bought it a year later, right? Boom. Now it's a 7-figure crypto portfolio. Plus I got the AP. And this was in a year, right? 1 year ago, a little over a year, he did that. I have a client, Dave. It's actually one of my neighbors in Mexico when I used to live there. Did tremendous as well. I don't want to share his numbers. Doesn't want to talk about it publicly, but He bought himself a couple of watches. He's been very happy with his crypto portfolio. If you follow the system, you get results, right? People telling me they've made 100K on Coinbase. People telling me, 1 week into the group, how confident they are and how grateful they are to actually have a strategy that informs them as to what they should be doing in crypto. They researched it. They asked ChatGPT, is this good? It told them it was good, right? This is somebody who in February didn't want to sell all of their altcoins, didn't want to sell their portfolio. And he said, you know what? I'm really happy that I did that. I pulled the trigger and boom. If I hadn't taken action, I'd be down 50% plus at this point. So just wanted to let you know that I appreciate your brutal honesty always. He texted me and said, should I really sell? Do you really think the market's going to go down? I don't want to sell. And I was like, you need to sell. Okay. It's not financial advice, but that's what I'm doing. I am selling. Why would I be selling? Why would I be telling people in the group to sell if I didn't think it was a good idea? Right. Then we saved ourselves massive downside from stocks as a result of getting out of this. We got out of MicroStrategy at like 335, Coinbase 265. Those drew down massively. Right. First month in the group, very happy member. Right. BNB just gives you clarity. Right. It gives you clarity as to what you should do. This private client did 3x in his first year in the program. He's been with me now for his third year. This member, a couple of weeks after their allocation call, their portfolio went up 40K. Now, mind you, the market was pumping at this particular period of time, but he just repositioned himself, got out of ETH, bought some SOL, bought a few other things. Boom, market started to pump. He was in a way better position than when before he joined. Okay. So everything is very clearly laid out in BNB for people to be successful. It's not hard if you have a couple hours per week to take advantage of all of the calls that we post in the group and see upside out of it, or at a bare minimum, properly protect the capital that you already have in the market by adapting our strategy towards it, not holding, a massive portfolio of 20, 30 altcoins and just, it'll all work out. No, following an actual blueprint for success. And you can see it in our Trustpilot reviews, right? We have nothing but 5-star reviews on Trustpilot, right? You can go message any of these people and you can ask them, what do you think of your experience in BNB? They're going to say it's very positive because they've made money. They've gotten clarity. They've learned things that they didn't know. Imagine this masterclass call that we just did now. Imagine doing one of these every single week for a year. How much do you think you would know about the markets, right? That's what I do every single week on Thursdays at noon. Okay. Every once in a while, I'll spend a Sunday doing it for free for you guys on Instagram and on YouTube, but I do this every single week for everybody in BNB. Okay. So some of you may be wondering, well, I think I might want to join BNB. Is it for me? And if you're an entrepreneur or if you're a busy professional that's looking for a very time efficient way to invest in crypto successfully and crypto related stocks and get a second opinion on the stock market, BNB is for you. If you're looking to eliminate guesswork from crypto investing and just follow a very simple, highly effective system, BNB is built exactly for people like you. And if you're searching for a very high level strategy to follow and you want to adapt it to your own risk tolerance and you have experience in these markets and you call yourself an investor, BNB is built as a resource for you to lean on and for you to perform better in these markets with because you have more information. Everybody in financial markets knows that those that have the most information win the game. Okay. BNB is perfect for people who are done gambling. I bet a lot of you guys on this call are done gambling. You're done guessing. You want to invest in crypto with something that's proven. You want to use data to make your decisions. You don't want to use your heart or your head. You want to use data to make the decisions. You want a strategy that works. Okay. It will work for you. Okay. If you have 30K or more, you can join BNB. If you have less than 30K, I think you should focus on self-development and you should get more money in your bank account and build up a degree of capital that you can effectively invest. If you have 30K, 50K, 100K or more, if you have $250,000 or more, BNB is perfect for you. You can make the strategy work without taking reckless risk. Okay. If you're too busy watching charts, right? You don't want to, learn this solo. You don't really have the time to figure all this out. You just want somebody to give you all the information on a platter and let you decide what you want to do. BNB is for you. If you want all the weekly calls, all the tools, all the software, Alpha AI, all those buy signals that I showed you, you want those to pop up on your phone, BNB is for you. And most importantly, if you value high-level relationships, high-level people, having a relationship with somebody like me, having a relationship with the people that are in BNB, some very notable online business figures and offline business figures in BNB that are doing crazy numbers in their businesses. And they're out having lunch with each other in places like Marbella or in Cape Town or in London. They're connecting with each other. These people are all in BNB and they're connected as a result of this community. So if you want to leave behind all of the confusion, you want to leave behind the chaos of Twitter and Alex Becker and all these like gurus that you look up to on the internet, you've got to join BNB to get rid of all this inconsistency and just have clarity on the market. You want control, right? If you don't respect your money in this market, I don't think investing is for you. And frankly, I wouldn't want to work with you if you don't respect your money. But respecting your money and actually having a strategy for what you're doing makes the most sense for you as an investor. If you're not with 30K or more, I don't think BNB is for you. Okay. I don't think it's going to be immediately valuable for your ROI unless you want the networking component. If you just want to follow hype on Twitter or you want to trade meme coins or influencer calls with no strategy, it's not for you. Okay. And if you think that you can time the market perfectly on your own and that you think you're smarter than me, you have more than 6 years of full-time experience in this market, you spend every single day at your desk studying this, fucking Saturdays, Sundays like today, spending time on this market, going through things. You want to learn from people that teach people. Like, do you know how much more I've learned about crypto as a result of setting up an entire program to educate people about crypto? It makes you go the extra mile. It makes you do the extra effort because you know you have hundreds of people who rely on you at the end of the day. That is why all of the first quarter of this year, I was at my desk literally 24/7 as the market was going down, figuring out, okay, what's going on? How are we strategizing against this? Where are we setting our next, positions up for success when the market turns around? I figured all that out. I didn't go on vacation. I didn't sell my portfolio and go, okay, well, I got all this money. What should I do with it? I stayed locked in. Everyone else gave up on crypto, right? I'm literally one of the only people that's been here since the very beginning that never gave up on doing exactly what I do every single day. Didn't look for something else. Didn't pivot to another niche or anything. This is everything. This is everything that I have ever lived and breathed is crypto, is bull market blueprint. So that begs me to ask you, which path do you want to take? Do you want to do this on your own? Or do you want to do this with people who actually know what they're doing? Because if you've made it this far, you know that something needs to change with your investing habits with crypto. Okay. You have two choices. You can keep doing it alone. You can keep making the same mistakes. You can keep trying to figure this out on YouTube or with webinars like this, and you will probably make some progress. But eventually what's going to happen is people that are already just in here with this information are making more progress with you than you, and you're costing yourself more time and more money, right? If you don't value your time, BNB is not for you. If you value your time, BNB is perfect for you, okay? If you want a path that 300 other people have taken to actually build a portfolio, to build a degree of confidence in their investments, and to get results that they've always wanted, you're gonna wanna join BNB, okay? That is the path for you. If you want a proven system, if you want those buy and sell signals, if you want to jump on a call with me weekly and learn about this stuff, you want live updates, you want to be able to text me and say, Luke, I don't know what to do with the market right now. My portfolio is going down. My portfolio is going up. Should I sell? Should I buy? My girlfriend hates me. What do I do? Like all these things you get access to in BNB. I literally let you message me. That's part of what I do is give people access to me. That's why it's not filled with thousands of people. It's a few hundred people because we're building a real network of investors who want to take this seriously. Okay. If you want a community that is focused on building long-term wealth and not just short-term quick wins and Discord this and Discord that, and okay, meme coins, now NFTs, now let's try to make our own coins and rug each other. This is not for you. But if you want long-term wealth building, you want to be in a community with really smart people who have big ambitions and big goals, Bull Market Blueprint is the place to be. It is where you should be a member if you feel like you fit into that, right? Maybe some of you guys are not cut out for this, right? Maybe you have to level up a little bit before you can join BNB. Maybe some of you guys are perfect in that position where you've been waiting to take the next step and you want to work with somebody who knows what they're doing in this market and you want to be around with people that know what they're doing in business. That is going to be the place for you, which is going to be BNB. Because if you're serious about winning in this market cycle, I'm like actually serious, not just want to screw around and see what crypto can do. If you're really serious about this, this is where you're going to do it alongside me. If you're one of the 87% of crypto investors sitting in unrealized losses while Bitcoin hits all-time highs, if you've lost $20,000, $30,000, $100,000, or even more following YouTube gurus who were secretly paid to promote coins they dumped on you, and if you're sick and tired of being the sucker at the poker table while the insiders get rich, then what I'm about to reveal to you will either make you very wealthy or very angry. In fact, probably both. My name is Luke Davis, and for the past 6 years, I've been operating on the inside of the crypto world that those YouTube influencers and Twitter pumpers desperately don't want you to see. While they were telling you to diamond hand your altcoins, I was quietly building a multi-7-figure crypto portfolio using a system so precise it called 11 out of the 14 most recent major market tops and bottoms to the exact day. While they were promoting meme coins for $50,000 paychecks, I was warning my private group to exit the entire altcoin market on February 6th. focused, saving them an average of 30% when everything crashed 3 weeks later. And while they were promising you alt season is coming, I was helping Pablo make $281,000 in just 28 days, helping Bobby 5x his account in a single year and showing hundreds of others how to grow and preserve their crypto portfolios. Now, here's what really separates me from every crypto guru you've ever followed. I don't just talk about my wins, I show you my actual portfolio. Every single trade, every entry, every exit, every dollar of my 7-figure allocations is visible to my members in real time. When I say I bought Bitcoin at $16,000 in November 2022, I can show you the alpha AI signal that triggered it. When I say I sold Solana for a 5x gain, I can show you the entries and the exact macro analysis that timed that exit. And when I say I've helped over 300 investors across 21 countries grow and protect their portfolios in the most volatile market on earth, I can prove it with testimonials, screenshots, and account statements. You're probably wondering, Luke, what's your secret? How did you crack the code that everyone else is missing? And the answer will surprise you. It's not technical analysis, it's not following trends, it's not even about picking the right coins. The secret is something I call macro-driven positioning, and it's based on a simple truth that 95% of crypto investors are completely ignorant about. Crypto doesn't move on crypto news. It moves on global liquidity flows, central bank policy, currency debasement, and institutional capital allocation patterns that most people can't even pronounce, let alone understand. While retail investors are reading crypto Twitter and watching YouTube videos about which altcoin will moon next, I'm analyzing unemployment data, studying central bank moves, and tracking the $200 billion that BlackRock, Fidelity, and major institutions are positioning into digital assets right now. But here's what really pisses me off about this whole industry. There's an entire army of crypto influencers, YouTube channels, and Telegram groups whose business model depends on you losing money. They get paid to promote coins, they dump their bags on their followers, they create exit liquidity for venture capitalists and early investors who laugh all the way to the bank while you hold their worthless tokens to zero. Think Alex Becker promoting Pengu, or that endless parade of AI agent shitcoins and their pumpers. The diamond hands culture that keeps you holding while smart money exits. This isn't investing. This is wealth extraction from you to them, which is exactly why I built something that's never existed before in the crypto world. Bull Market Blueprint. A dual intelligence system that gives you the same informational advantage as the pros on Wall Street without needing the degree or the headache. Bull Market Blueprint isn't another course or a community. It's a toolkit that gives you the same data streams, positioning insights, and market intelligence that billion-dollar funds use to dominate their markets. Except now, you're on the winning side. So let me walk you through exactly how this system works and what it's going to do for your life. At the core of BMB is Alpha AI, my proprietary software that's issued 14 signals in the past 24 months, with 11 being accurate to the day. You'll receive real-time buy and sell alerts directly to your phone, plus our risk metric heat map that tells you when the market is at maximum opportunity or maximum danger. No more guessing when to buy, and no more panic selling at the worst possible moments. Second, you'll get weekly live calls with me, where I'll break down exactly what the world's central banks are doing, where global liquidity is flowing, and what adjustments I'm making to my portfolio. You'll see my screen, my analysis, and my thinking process all in real time. Third, you get complete transparency into my personal portfolio. Every position, every entry, every exit, with explanations of why I'm making each move. It's like having a 7-figure crypto investor sitting next to you, showing you exactly what he's doing with his own money. Most gurus hide their actual trades. I show you mine before I even execute them. Fourth, you get direct messaging access to myself and my team. When you have a question about a position, a market move, or a macro event, you can get the answers from people who actually know what they're talking about, not some customer service rep that's reading from a script. And fifth, you get access to my private community of 260 plus serious investors, entrepreneurs, business owners, and professionals who are actually making money inside and outside of crypto. The networking alone is worth the price of admission. Now let me show you what this system does for real people with real money. Pablo followed one of my portfolio additions last month and made $281,000 in 28 days. Kevin caught my Ethereum analysis and banked 124 grand in a single weekend. Bobby and his wife worked together with our system to 5x their entire portfolio in just 1 year, while Hunter added $100,000 of growth to his portfolio in his first 6 months alone. Matt used his profits to help him and his wife buy an apartment in New York and renovated after being in BNB for just 8 months. Dave went from almost quitting crypto to complete confidence in his investing future. And when I issued the February 6th exit alert, Jas and dozens of other members saved multiple six-figure losses when the market crashed. As Matt told me,
my wife knows that I'm on this call right now. If BNB didn't work, she wouldn't allow me to be on this call.
But here's what really matters: how this transforms your relationship with investing. Instead of checking your portfolio with anxiety, you will check it with confidence. You'll know why your positions are moving and what to do about it. Instead of losing sleep over market volatility, you will sleep peacefully, knowing you have a system that's designed to protect your capital first and grow it second. Instead of feeling stupid for missing opportunities or holding too long, you'll move with precision because you'll understand the macro forces driving every market move. And instead of getting emotional about your investments, you'll approach them like a professional with data, strategy, and a clear exit plan. Matt told me,
the fact that I was able to go from no strategy on like a Thursday to now Friday afternoon having a strategy within 24 hours, it made me feel good. It's like, okay, the money that I have is now safe.
Dave said,
by the time we put the portfolio, I had never been more confident and happy and at peace with where I was at with investing in crypto.
But here's something that might surprise you. I am very selective about who I work with. Not because I don't have the time, but because I've learned that the wrong people in a group can hurt the experience for everyone else. I'm talking about the person who panics and sends urgent messages every time the market moves 5%, or the one guy who constantly questions the strategy because it doesn't match what they heard on Twitter, or the person who treats this like a get-rich-quick scheme instead of a serious investing plan. These behaviors are completely disruptive. They create doubt where there should be confidence, and they turn strategic discussions into emotional reactions. And that's why I have requirements. You need at least $50,000 in investable capital or current portfolio size. This is not for investors without the capital to make actual moves. You need to be someone who's built something successful before, whether in business or in another area of life, because you understand that using a proven system gets you better results than just trying to wing it. And you need to fit in with the culture that we've created. Serious investors who value their strategy over speculation. I'd rather work with a smaller group of committed people than deal with the chaos that comes from letting just anyone in. Now, I know what you're thinking. You've been burned before. You've joined programs that promised the moon and they delivered garbage. So let me address your biggest concerns. This sounds too good to be true. Fair enough. I felt the same sense of shock when I discovered that 87% of crypto investors are losing money while Bitcoin hits all-time highs. But the data doesn't lie. Would you like to see the Alpha AI signal history, the portfolio transparency, or maybe one of the member testimonials? I can't afford this. Actually, you can't afford not to do this. Our average member lost 4 times more than the membership fee trying to figure this out on their own before they ended up joining us. One member even lost upwards of $7.5 million before joining BNB. It definitely makes you think, how much have you lost chasing YouTuber recommendations? And how much profit have you left on the table by investing without the right systems? The market is boring right now. Perfect. That's exactly why you want to get positioned. Matt and Dave joined during a boring market, and their portfolios have performed exceptionally well since that point. Boring markets create the best opportunities for people who know what they're doing. I'll wait till I'm profitable again. That's like saying you'll start exercising after you get abs. The time to get the system is before you need it, not after you've already lost your shirt. Let me be frank with you. You have 2 choices right now. Choice number 1 is to keep doing what you've been doing, follow crypto Twitter, listen to those YouTubers who get paid to promote coins, set arbitrary price targets, hope for an alt season, and watch yourself continue to lose money while the institutions get rich. Choice number 2 is to join the elite minority who actually make money in crypto by following a system that's proven to work, backed by real results, and managed by somebody who puts his own portfolio where his mouth is. If you choose number 1, I respect that. Just don't come to us in 12 months when you're still underwater while our members keep stacking more profits into Bitcoin. But if you do want to join us, here's what happens next. You'll fill out our application. And yes, this is application only because I don't like to work with time wasters. If you qualify, you'll get a private consultation call where we map out your current capital allocation, your risk tolerance, and your goals. Then, if everything aligns, you'll get access to Alpha AI, my portfolio, the weekly calls, and a community of 260 plus serious investors who are actually making money in crypto. Let me paint you a picture of two very different futures. Future number one, it's 2030. Crypto is fully mainstream. Every bank offers Bitcoin, your parents are buying Ethereum through their retirement accounts, and you're finally ready to get serious about crypto investing. Except there's one problem. All the extraordinary gains are gone. Bitcoin moves 7% a year, just like the stock market. The opportunity that could have changed your financial trajectory forever, it's not there anymore. But let's talk about a different version of the future. A better one. It's also 2030. You positioned yourself in 2025 when institutions were still accumulating, when retail investors were still confused, and when the infrastructure was being built yet not complete. And you rode the wave instead of watching it from the shore. The truth is, crypto will be part of your life either way. But the question is, will you participate by design while massive returns are still possible? Or by default, when it's safe, it's boring, and ultimately too late? Every day you hesitate, BlackRock adds millions more to their Bitcoin position. Every week, another institution announces their crypto strategy. They're not waiting to get serious. So why are you? I've laid everything out. The problem: you're being systematically deceived by an industry that profits from your losses. The solution: bull market blueprint, a dual intelligence system that puts you on the winning side. The proof: Pablo's 281K, Kevin's 124 grand, Bobby's 5x portfolio, and Matt's New York apartment. All while the window for outsized growth is closing as crypto goes mainstream. Now comes the moment of truth. You can keep doing what you've been doing, following influencers, hoping for the best, watching others grow while you tread water, or you can apply below and join a small group of investors who actually understand how this game is played. The choice is yours. The opportunity is real, the results are documented. But I won't chase you, and I don't need to convince you, because the system works with or without you. Apply now or don't, but 5 years from now, remember this moment, because this was your chance to get serious. Welcome to the top.